Well, much of the focus of last week's key interest rate hike by the central bank was on the housing market. It left many wondering how it will affect the auto industry. Brad Rome, president of the Canadian Black Book, and joins me with insight on this right now. Brad, your house is your biggest investment. You're putting more money up for your house probably than anything else, biggest asset. But a lot of people forget that your vehicle is probably the second most thing you spend money on.
Yeah, exactly. The reality is the interest rates are going up, but in the short term, we don't see it having a major impact. I mean, put it in perspective.
All right, Brad, thank you very much. All right, we are done. No, but that's not where the story does end.
No,
that's not where the story ends.
No, it's things are. I mean, the interest rates are going to continue to go up. Short term, we're in good shape. We don't see that there's going to be any major change as far as the cost. I mean, on a $40,000 car, you're only talking $100 a year in interest, so it's not big. But longer term, there may be.
You have a used vehicle, though, that
Yes.
you want to move out. This is where you probably should be paying attention and maybe taking some action.
Absolutely. So in the last, I guess, month and a half, 2 months or so, the currency has really strengthened against the U.S. dollar. And so there's this phenomenon where trucks and SUVs were all being shipped to the U.S. because there was such demand for the vehicles, and the currency was helping that. Well, the currency is strengthened by 6% now, so the demand for those vehicles isn't quite as strong as it once was. With that being said, now is the time to turn around. If you've got a truck or SUV that you're looking to trade in, that would be probably the perfect time to go and do that, especially with the manufacturer incentives being so strong in the new cars.
And is that what about if you are going to trade in a vehicle, a used vehicle?
Yep.
Does that have any bearing on a decision that you should be making with a dealer, not through AutoTrader?
Yeah. No, I think no doubt about it. I think right now is probably your best time to, if you've got especially a truck or SUV. I mean, the demand for those vehicles is starting to diminish a little bit. And, in Canada, there's going to be more supply of used coming in, so that's going to depress prices. In the States, they've got the same thing happening. The currency is strengthening, which makes them less attractive for Canada. So used prices are going to go down overall. So if you're in the market, you're thinking about doing it, now is definitely the time to try to move, especially a truck or SUV.
So what are we looking for right now? Are we looking for another quarter point before we start to panic a little?
I don't think a quarter point is going to make that much of a difference either. But if we talk maybe a full percentage point or something like that, we'll leave that to Mr. Poulos to figure out. But the reality is that another quarter point's probably not going to change it that much as far as overall affordability.
We haven't seen a change even of a quarter point like this in 7 years.
Yeah, exactly.
In about 7 years.
That's right.
All right. Tell me a little bit more about Black Book. How can people get more in the proper information?
Yes.
Because I tell you, we've never really looked privately for a vehicle in a long, long time. We were a while back. There are so many pitfalls, but Black Book is there to help you out.
You can go to the CanadianBlackBook.com website, and you can look up the value of your current vehicle. You can look up, if you're interested in a new vehicle, you can find out what that vehicle is worth now, both now and in the future. And as well, if you're looking for a vehicle, we have average asking prices based on all the listings we have. We've got over 175,000 vehicle listings on the site as well. So it's a great resource when you're in the market to buy.
All right, CanadianBlackBook.com. Brad Rome, President, thank you very much.
Thank you, Kevin.